And it's now time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. Scott, it's so good to see you, as well as, of course, Rick Ducat. And we're talking first and foremost, IonQ sitting at its 50-day moving average. We know quantum stocks have been under this bubble scrutiny. So walk us through how you think through trading this name, especially given, of course, its high levels of implied volatility.
Oh, yeah, and great to see you as well, Jenny. Yes, IonQ, they have earnings on Wednesday. The stock is down at critical support at the 50-day moving average, and quantum has been the rage. And there's lots of questions, like you said, whether these stocks are in a bubble now, but many of them already have working products, paying customers, and this company, it's lofty. It's got a $22 billion market cap and a PE ratio that is absolutely crazy. Nonetheless, I'm bullish. I'm buying a diagonal call spread. What does that mean? That means I'm selling this week's 65 strike call. I'm buying next week's 60 strike call. Pay about $3.50 to $3.75 for that. If this critical support area holds, we could see a really nice pop here. But like everything I do, Jenny, if I'm wrong here, I know what I have at risk. I am always risk defined.
Okay, and especially because important to be risk defined here as we do approach earnings that would be on Wednesday after the closing bell. So now let's walk through the charts here because, again, a name that's falling pretty substantially today, actually, but we approach that critical test of earnings.
Right. And, you know, if we were to look at kind of that 60 to 65 level that Scott was focusing on, kind of right here is where that would shake out. So we do have some of these levels highlighted on our chart. I have my eye on the same point here. 65.50 to be more exact right here was our intraday high that we saw after our more notable decline here. You can see we hit our intraday highs for the year. We had our high close near 82.09 and then a swift fall back down to some supportive areas here. 54.74, if we were to backtrack all the way here, was an old high point here that then became supportive in terms of our closing price. So about 55 to 65, kind of broadly speaking, is the range that many traders may have their eye on. If we were to add some of our other studies here, our moving averages, 21-day, 63-day exponential moving averages, not exactly the same as the simple moving averages here, but lining up pretty closely with the high and the current price for today right now. So around 63 and 58 would be some even more short-term, more granular support and resistance levels to consider. RSI potentially on the verge of breaking out here along with price, but the price breakout so far has kind of fizzled. We're back and sitting on that trend line once more here. Finally, if we were to look at our other studies, volume profile shows a small node right about where we are now. Things really start to pick up all the way down here near 4150. So those would be some areas to consider as well.
Okay, now we'll shift gears to another name with earnings actually still ahead. That would be on Thursday before the market opens, Datadog. And so Datadog also has seen some levels of major resistance, also implied volatility fairly elevated. So Scott, how do you manage your risk again for trading this name, especially if we could see an earnings surprise to the upside?
Sure, and yes, implied volatility is very expensive, and earnings are Thursday morning. The stock is up near some pretty large resistance. So I'm actually going the other way on this one. I'm buying a diagonal put spread on this one, which is bearish. It does take advantage of the extreme implied volatility for this week's option. So I'm selling this week's 140 strike put, buying next week's 145 strike put. Pretty inexpensive. Just have to pay around $1, maybe a little bit more for that. If the stock goes up here, that's my risk, Jenny. It's $1. If the stock kind of stays here, moves down even to that range there, this should explode, at least the value of this position.
Okay, and so all that to be said, as we now, of course, look through the chart, Rick, what technically speaking is sticking out to you?
Well, 140 to 145 down right about here. And we can see that in the shorter term for our price action, we had our upside breakout that took us above some important levels here. This green line was an old high point from back here, kind of a low point and a stopping point as well. General area around 153 stood out. It was also our recent floor here. We had a bit of a triangular pattern here, symmetrical triangle, where price was consolidating. We had two increasingly narrowing trend lines going across the highs and the lows there in our short-term trading activity here. We touched on that 153 level again. Now we have made our way back up to the top of the range, but now we have taken a pause once again at 164. So that was our best closing price that we saw from that area. A push above that could lead to 168.65, those old closing highs that we saw from almost a year ago or so. Finally, if we were to look at our moving averages here, our 21-day near 156 is fairly close to that supportive level that I mentioned here, but our 63-day EMA lines up pretty well with our trend line here. So that could be another important boundary to the downside if things do start to break toward that level here. Also pretty close to where Scott was mentioning as well.
Okay, now last but not least, we're talking a name that, of course, already had earnings last week with a stellar move post-earnings, and actually now one of our best performing stocks in the S&P 500 this year, Seagate. And so Seagate has seen, again, some huge momentum to the upside. But Scott, say you were looking to take advantage of maybe just a brief pause in some of the really phenomenal rally we've seen for this stock.
Absolutely. Just over the last several minutes, 15 minutes or so, we've seen Seagate actually break out once again. But it has had an incredible move since last week, strengthened by great earnings. In my opinion, though, this is too much, too far, too fast. And this is just a short-term trade looking for a little bit of a pullback. And what I like about this one is that implied volatility, which we usually see come crashing down after earnings, has actually stayed pretty elevated, making options pretty expensive. So I am selling a bearish iron condor, which for right now, actually, the call side is just slightly in the money. But I'm selling this week's 240, 235 put spread. I'm also selling this week's 260, 265 call spread. I can get about $3.25, $3.50 credit for that, which is a huge, huge amount. If I got $3.50 for that, Jenny, the most risk I have, no matter what the move in Seagate is for this week, is $1.50. So this is a bearish trade for this week only.
And of course, you did mention the fact that we have seen actually a decent pop today to start off this session and this week, which is no surprise. Seagate has been on a run as of late. But now, last but not least, when we do go through this chart here, Rick, there's pretty much few and far between stocks that look as strong as this one has on a yearly basis.
Yes, storage space in general has been very strong as part of the tech sector. 235 to 265. Right about here is that range in focus here. We had our highs near 280.35 recently. Before that, we had this shape, a falling wedge here, where after our explosive move to the upside, we were treated to this 210 level here, some old lows. From there, we bounced. We broke above that short-term trend line. Now, one area to consider to the downside, our old highs and subsequent lows near 240 stand out. When we look at some of our other studies, we can see that RSI is still trending downward. We broke out of that overbought area here. So what the bulls would want to see is for this bearish divergence to resolve, for RSI to make new highs along with price in tandem, and also push back into that overbought area here. So 265 old highs, resistance point potentially, 280.35 was our highs beyond there for this particular stock. When we also look quickly at our volume profile study, the most important volume area is down here near about 225 in terms of recent price activity. +1 and +2 standard deviation channels could also come into play, 252 and 302 respectively.
Okay, yeah, and a nice 2.5% pop, of course, to start off this week. But appreciate it to Rick Ducat, our chart master, and Scott Bauer from Prosper Trading Academy for both of your help today.